Good evening, everyone. Tim Knight from slopeofhope.com, and a special thank you to those who have clicked the donate button. It's nice to know that my work's appreciated. Uh, so thanks again. Well, let's see. I'm amazed how fast sentiment changes, even on a blog like this, or maybe it'd be especially on a blog like this. Before the central bank rally from hell, when we were down around here, a lot of bearishness, a lot of talk about, this is just the beginning kind of thing. And it's funny because like one day later, not only was there a lot of "don't fight the Fed," but I had suggested, in the comment section, I said, my one remark was October 27. In other words, I was relating this to this. And even diehard slopers who have signed a loyalty oath jumped down my throat. I even got downvoted for that, saying that, it's different this time. This was at the end of a long up run, and this is why it's different. And I still think it's a valid, albeit very miniature, analog. What I said on my show yesterday was that we could look for a October 28th-ish type pattern the next day, perhaps. I noted that we had this teeny little doji after this intervention rally. And goodness gracious me, look at that. Look what happened. Isn't that something? So anyway, pretty cool. Now, I guess the question, of course, is, well, if this equals this, and if this equals this, then are we going to have one of these? Well, I hope so. I always hope so, but it's not at all guaranteed. Of course, everything hinges on the jobs report. I don't know what the report will be or what the market's reaction to it will be. Even if you did know the report, I don't think you could trade off of that. I mean, if you knew they added 500,000 jobs or they lost 500,000 jobs or somewhere in between, the way the market reacts to these things is just unpredictable, so who knows. But clearly, these rather wide Fibonacci targets are worth observing, whatever move we get. It would be kind of technically pretty if we descended away from this, our good friend the triangle, but the triangle is kind of petering out. I mean, we're getting past the pattern itself here, so it's going to matter really not at all from here on. Maybe give it another day of relevance. I'm going to talk about the ETFs a bit. I don't have much to say in terms of individual stocks, in terms of a how am I positioned kind of thing. Still short, surprise, but still very long cash. Majority in cash, as has been the case recently. I would like to see what happens tomorrow. I did add some shorts today. Today was a very quiet day, and out of like 170 different prospects, I plucked out about maybe 15 that looked especially appealing. But yeah, after yesterday, not a time to get really crazy in either direction. But let's look at some ETFs, because I picked out about maybe a dozen here that were worth looking at. So AGQ, let's get out of this candlestick business. We're done with that. AGQ, I don't really trade this, but I find precious metals kind of interesting right now. Silver obviously looks a lot like this chart. We'll look at that in a moment. But for the more aggressive trader, nice little gap fill having taken place here. DBC, I am short this. This is in fact my largest short. It's an okay pattern. It moves slowly enough that I feel comfortable having this as my large short. Another gap fill situation. This one more dramatic. It dipped more severely than what we were just looking at. But obviously a stop here just above this level. So 27.93 stop on that. DDM and DIA, very much kindred spirits. We've got in each case this descending trend line. It's not, I mean, it's got a number of points to it. Here. and coming up on it now. So it's not bad. It's not the greatest either, because it wouldn't take that much of a change in sentiment to poke right through that and send this soaring higher. My just totally out of the blue hunch feeling is that if we do get a jobs report that yields very positive feelings, I think we could see to the bears, very disheartening rally tomorrow. Maybe about half the size we saw yesterday. So the week as a whole could turn out quite bullish. Putting it another way, if things are going to start heading south again, they sure as hell better do so in a big hurry. There's not gobs and gobs of room left. On that note, our good friend ERY, this will obviously fail at some point in terms of its predictive power, but it's kind of cute right now in terms of watching this lower line. And we're still, incredibly, just look at this journey here, shooting up and then down again in just a matter of days. Quite a dramatic turn. This line isn't particularly anchored to anything except in as much as it divides really these halves. It's a pretty good, if you think of this as a broadening formation, it's a pretty good midpoint for that. I mean, realistically speaking, I didn't expect this thing to, the market would genuinely have to go into 2008 autumn mode for it to traverse this entire length. But this, it's fun so far, and we'll see if it holds. GDX had a interesting day. As we zoom in tighter to this, we can see this isn't in candlestick form, but we've got a bit of a spinning top here. Some rather long shadows being cast in a very, very tiny body. A lot of uncertainty here, clearly. This analog, this, and this still holding. Indeed, I would say that the formation we're undergoing now is much more substantial than what we saw back in our beloved 2008. Gold is kind of a funny one because I had actually done this as a gap play, and let's zoom in really tight here. There was a small gap between the 16th and the 17th of November, establishing a stop price of 170.58. That is just above that gap fill. What was today's high? 170.57. So that's a kind of wipe the sweat off your brow kind of threat to covering or closing that gap. So quite an interesting one there. J&K, I've got a pretty goodly, I've established this just today actually, pretty goodly sized short on this one. If the market gets soft again, I think this will get particularly weak. And I've set a stop here rather conservatively, just above yesterday's high. I'm not going to stick around to see how high this thing can go if we do get another rally. OIH, I've got a small short I've established on this one today, kind of mashed right up against that rather nice multi-year trend line. I usually don't like trend lines where you get all sorts of piercings like this going on, but I think from a broader perspective you can see how it's not a bad guide in terms of support and resistance. And like that, okay. Silver we kind of looked at already by way of AGQ. Bit of a similar situation, although the stop obviously is a different price. That'd be about 32.62 if it were me setting that stop. I'm short. I'm short no precious metals right now. Let's just wrap this up with a couple of last items here. USO. Come on, crude oil was actually down about 0.5% today. A mildly interesting chart. The fact that this was a nice head and shoulders pattern, but clearly from the October, November, just an explosive move higher. Seems to be kind of pooping out right here, to use a technical term. I don't have a position in this one, and I'm not particularly... I feel satisfied enough that I've got DBC. I'm not really keen on this one. And finally, the wonderful world of financials, which had a huge rally yesterday, gave up a bit of that today. Without the firm participation of financials, I don't think any rally is that sustainable. I mean, looking here at the very large picture, we can see here that after the cataclysmic drop, this gorgeous waterfall, there's kind of nowhere to go but up for these things. It had the makings in this area that I'm sort of putting a square around. It had the makings of a very powerful base. It did very little with that. Basically all the money was made from here to here. That's where the huge percentage gains were made. Since then, it had this kind of rally and then petered away, and then again, and then again. And we're actually, as you can see, we're at the kind of levels right now that we were at while it was completing its recovery back in late 08 and early 09. So from another way to think of it is from the midst of the crash to now, it's really gone nowhere. And this, if it can't manage a major recovery here, and if the market had been allowed to do what it would have done naturally, I think we would have had a handsome recovery. If it can't do it with this, it sure isn't going to do it with something like this. This is puny. At best, at absolute best, it might be able to get back to this area with more announcements like we had yesterday. But without that, I think this is going to continue to obey the law of gravity and bleed its way down back into the single digits with interventions along the way. So anyway, that's it for me. Not a lot of strong feelings. Maybe I'll be more passionate about direction after the jobs report is over. But that is the latest in the wonderful world of ETFs. I bid you adieu, and I thank you for your attention. Bye.